Hi everyone, welcome to Audrey with Intero Real Estate Services. My mission is to help you live your real estate dream in the San Francisco Bay Area. Today, I would like to share with you how potential buyers can potentially improve their credit profile and make the loan application process smoother. I have my trusted lender, Rashel, here with me. Rashel, would you like to introduce yourself a little bit before we dive in?
Sure. Thank you so much, Audrey. I'm excited to be here. Good morning, everyone. Just want to share a little bit about myself. I've been in the industry about 20 years and excited to partner with Prosperity Home Mortgage. We're one of the largest mortgage companies actually owned by Berkshire Hathaway, so Warren Buffett. We're Intero's in-house lender. So our number one priority are agents like Audrey and your clients. So grateful to be here today and hope to add a lot of value.
Thank you, Rochelle. I think a lot of potential buyer out there are probably very curious. How is credit score calculated? Rochelle, can you share a little bit about what factors go into a credit score?
That's a great question. So, as lenders, we typically look at all three credit scores from all three bureaus. So, Experian, TransUnion, and Equifax. And it's actually divided in a pie, but not equally. So, to give you an idea, and I've taken some notes just to make sure I have all the numbers correctly for everyone. So, payment history, it's about 35% of that overall pie. So, it's important that you're making your payments on time, you want to avoid any late or delinquencies because that history can impact over a third of your overall credit score. So 35%. To give you an idea, perhaps things can happen. Maybe one missed payment may not be detrimental depending on what it is. But it's important that we treat credit with a lot of sensitivity because I always like to say credit is king. It could really help us just continue living a very flourished life. And when we're looking for financing options, put us in better position. So overall payment history is about 35%. 30% is going to be outstanding debt. So how much debt do you owe? Whether it's car loans, do you have an existing mortgage? Do you have trade lines and so forth? So that outstanding amount is going to impact about 30% of the credit.
Mhm.
And then 15% is going to be the length. How long have you had credit?
Mhm.
So the longer you've had credit established, the stronger your credit's going to appear. To give you an idea, perhaps I started with a $250 secure credit card, maybe at the age of 18. If now as a borrower, you could be in your mid late 30s, you have that history, that tenure to be able to show your responsibility and your credibility as a borrower, which could definitely impact your overall credit scores. And to give you an idea, again, that's about 10%. And I'm sorry, the length is 15% as far as your overall credit score. And type of credit is about 10%. So, depending on if we're looking at revolving credit, are we looking at for example, mortgage loan? Are we looking at a trade line? These are all different types of credit. The different types of credit impacts our overall credit score as well, about 10% in the overall scheme of things. And then lastly is new credit. So how often have we established new credit? New credit typically is about 10% of our overall credit score. So all of these lumped together will make up that overall credit score that we look at. And again, we look at all three bureaus. Typically, lenders use the middle score of a borrower, but I hope that helps answer your question as far as how a credit score is made up and what impacts the overall credit score.
Yeah, that's actually very informative. That I actually never know there's actually a hidden formula about a credit score. So I understand that you have almost 20 years of experience in the home mortgage industry. From a loan officer's perspective, how can a potential buyer out there try, do to actually improve their credit profile as well as smooth the loan application processes?
That's a great question. I always like to say whatever we have done in the initial pre-approval stage, we want to continue that. So no surprises. And what do I mean by that? continuing making your payments on time. Don't miss any payments. That's really, really important and key. If you're utilizing your credit card, for example, every month you want to maximize your benefits and then pay it off like you normally have, that's fine. Those are expenses that we've already looked at when we've pre-approved you. What I'm referring to is hold off on making any large purchases. Perhaps you have your eye on that new Tesla, or you're thinking, you know what, summer is going to be here before you know it. I want to treat my family to this beautiful Italian vacation and charge a massive amount on your credit card. That can impact your overall qualification. So any large purchases, charging, or even cash withdrawals could impact a client's credit or pre-approval as well. Don't close off any credit lines as well too. So that's one that comes up often is you have clients who assume, oh, I have credit cards that I'm not utilizing. I'm just going to go ahead and close them, because even by a client closing out a credit card or a loan could potentially initially impact negatively a client's credit because it closes the amount of credit available to them. So again, leave things as is. As far as applying for new credit, so that one's an interesting one. We always say clients have a 45-day window from the time that they have applied with one mortgage lender to be able to get a second opinion from another mortgage lender. And we encourage that if that's what a client wants to do. However, if it's outside of that window, then it could negatively impact client's credit score. And so it's important that they know that there is a want to call a safe window for them to leverage. Outside of that window, it would be potentially a negative pull. And then I know I touched on it just a second ago, but even though it doesn't necessarily impact credit, but even if a client is perhaps thinking of making a large purchase and not using credit, but perhaps cash, depending on how much that transaction is and how much of that withdrawal is being done from their account, could potentially impact their overall qualifications, because that funds, those money need to be sourced, and a lender is going to be looking at that very closely. So my quick tip to sum that all up is if you are looking to absolutely have to buy something, contact your loan officer, contact me. I'd love to be able to talk through it. Perhaps we can come up with a good game plan so that it does not jeopardize a client's pre-approval and loan process.
Yeah, thank you so much, Rashel. That
My
is very
pleasure.
informative. To the potential buyers out there, if you have any question buying a home or getting a loan, contact me or Rashel. I have put our contact information along with this video. We would love to help you put together a winning strategy. Let's do it.